Today's topic is the preparation of cost sheet. So we have the details of Bangalore Limited supplier. So from that information we have to prepare the cost sheet. So first let's see the problem, what the information they have given for preparing a cost sheet. So the Bangalore Limited suppliers supplies you the following information and requires you to prepare a cost sheet. Here they gave the information. The stock of raw materials on 1st September 2013, that is 75,000, and stock of raw materials on 31st September 2013, that is 91,500. And they have given direct expenses, direct wages which they have paid for the production, that is 52,500, and indirect wages are there for that company, that is 2,750. Sales are 2 lakhs, and work in progress on 1st September 2013 is 28,000, and closing at the closing of the month they have work in progress, that is 35,000, and they have purchased raw material of 66,000. So they are running their factory in a rent building, so they are paying the rent of factory rates, and they are also paying for power together. They are paying 15,000, and depreciation and plant and machinery they are calculating the depreciation, that is 3,500 rupees, and expenses on purchases. So they have paid some expenses on purchases when they are purchasing the raw materials, that is 1,500. They also paid carriage outward, that is 2,500. They are also spending money for their product advertising. So advertising they have paid 3,500, and office rent and taxes. So they are, and again they are running their office in the rent building, so they are paying the rent for that. So that is 2,500, and traveler wages and expenses, commission. So that is 6,500, and stock of finished goods on 1st September, that is 54,000, and closing stock of finished goods on 31st September, that is 31,000. This is the information they have given. From this we have to prepare the cost sheet. Let's see the preparation of a cost sheet. Here the cost sheet. So first we'll take the particulars, and the total is given. So here first we have to take the opening stock of raw material, that is 75,000, and we have to add the purchase of raw material which they have made in the month of September, that is 66,000, and the expenses on purchases we also have to add them to the opening of raw material. So here we are adding them. Those expenses are 1,500. So here the total comes 1,42,500. Here from that we have to less the closing stock of raw material, which is the end of the month. So to get the actual material consumed, so here we are deducting that amount of 91,500. After deducting that, we are getting the 51,000. This is called the material consumed. That means these details are about total material which they have consumed. That means they have used to produce products. So they have used 51,000 rupees of material to produce products in that September month, and for to that we have to add direct wages. So direct wages are 52,500. So after adding these direct expenses, we'll get the prime cost. That means these are the major costs which involves in any production of any production. that becomes 1,03,500, that is a prime cost. Now we have to calculate the works or factory overheads to get the works cost. So here opening work in progress is there, that is 28,000 in the month of September. So that means the company given information about the September month only. So we are preparing the cost sheet for September month. So here we have to add the indirect wages to the opening work in progress, that is 2,750, and we have to add the factory rent and rates and power, which is related to the factory overheads, that is 15,000. And they are also calculating depreciation and plant and machinery, that is 3,500. The total becomes 49,250, including all factory rents and depreciation. Now here we have to deduct the closing work in progress to get the works cost, actual works cost. So here the closing work in progress is 35,000. So after deducting work in progress, we'll get the 14,250 rupees of works or factory overhead. So we have to add this factory overheads to the prime cost. So after adding, we'll get the 1,70,750 is the works cost, which means the direct and indirect expenses included. Now we have to add the office and administration overheads to get the cost of production. So here they have given office rent and rates, that is 12,500. I'm taking this, there is only aspect under office and administration, so I'm taking this aspect direct in the outer column by adding to the works cost. So here 12,500 is the office rent and rates. So together the cost of production is 1,20,250 is the cost of production. And next we have to take the balance of finished goods. So here they have opening and closing finished goods. So that is opening stock of finished goods is 54,000. They are also having the closing stock of finished goods, that is 31,000. So from opening stock we have to deduct the closing stock. So after deducting that closing stock, we are getting the 23,000 rupees of finished goods. So we have to add this to the cost of production. After adding this, we'll get the cost of goods sold, actual goods sold. So that is 1,43,250. So from there, here we have to get the total cost or the cost of sales. So to get that, we have to add selling and distribution overheads. So there is a carriage outward paid by the company for the month of September, that is 2,500. And advertising, they are also paying advertising. That means they are advertising their product in different channels of advertising. So they are paying 3,500 for the month of September. And travelers wages and commissions, so those are 6,500. And together the selling and distribution overheads are 12,500. So we have to add these to the cost of goods sold. And after adding that, that is 55,750 is the total cost or cost of sales. And now we have to get the profit. So how we can get the profit? They have given the total sales. From total sales, if we deduct the total cost, we'll get the profit. So here the sales are 2 lakhs for the month of September. From that we have to deduct the total cost or the cost of sales, that is 1,55,750. So after deducting 1,55,750, The company has the profit of 44,250 per the month for the month of September. So this is the cost sheet for the company of Bangalore Limited according to the given information. So they are having the 44,250 profit for the month of September. Now let's see the another example for preparation of cost sheet. So here they have given information for preparing cost sheet and showing the different aspects. So from the following information, prepare cost sheet to show prime cost. They are asking to show the prime cost, works cost, cost of production, and cost of sales, and the last profit. So these are the aspects which they are asking to show. So let's see the information which they have given to us. That is raw material purchased 32,250. They have purchased of raw material and carriage on purchases. So on purchases they are having expenses. So those are 850 rupees and direct wages are there which they have paid on production, that is 18,450, and they are having the factory overheads of rupees 2,750, and they have selling overhead that is 2,450, and they have office overhead of rupees 1,850 rupees, and the sales they have made that is to 75,000 rupees. Sale of factory scrap, they are selling the scrap of factory, that is 250 rupees. With that they got 250 rupees, and the opening stock of finished goods, that is 9,750, and closing stock of finished goods is 11,100. This is the information which is furnished by them to show prime cost, works cost, cost of production, cost of sales, and profit. So let's see the calculation of cost sheet. Here they have given simple information according to that which we have prepared earlier. So according to that, the same proforma is followed to prepare this cost sheet also. So first we have to take the raw material which they have purchased of rupees 35,250 rupees, and they are having the carriage on purchases, so which they have paid for, maybe for the transportation maybe. So that is 850 rupees, and the direct wages, so for the production that is 18,450 rupees paid by the company. So the total becomes, that is prime cost 54,550 rupees is the prime cost for the company, and here we have to add the factory overheads to the prime cost. Before that we have sale of factory scrap which we have to deduct from the factory overhead. So here we are deducting the factory overhead of 250 rupees we are deducting. So after deducting we will get the 2,550 rupees. So after adding this factory overheads to the prime cost, the total is 57,050 rupees. That is the works overhead for the given information. Next we have to add the office overheads. They have given directly office overhead, that is 1,850 rupees. So these are added to the works cost, and to get the cost of production. So after adding that office overhead, The total is 58,900 rupees is the cost of production, which is these are the expenses directly involved in production. And they have the opening stock of finished goods in the beginning, that is 9,750 rupees, and they are also having the closing stock of finished goods, that is 11,100. So here the closing stock is more than the opening stock, so here we are getting the excess in the closing stock. So most probably in every company or in every the firm, the opening stock will be less than the closing stock will be less than the opening stock. Here the situation is different. The closing stock is more than the opening stock. So here whatever the excess amount we have to show in a bracket in outer column, which means this amount is deducted from the above amount, whatever the amount is. So here we are having the excess amount of 1350 rupees, which I am showing in the bracket. That means we have to deduct this amount from above amounts. So after deducting 1350 rupees from the cost of production, so the cost of goods sold is 57,550 rupees. Now, to get the total cost, we have to add the selling overheads, which are given in problem directly. They have given the selling overhead rupees of 2,450. So after adding this 2,450 to the cost of goods sold, the total cost is 60,000, and they are having the sales of rupees 70,000. So they are also asking to show the profit. So to calculate the profit, we have to deduct the total cost from sales. So after deducting, they are having the 15,000 rupees of profit in the given information, according to the given information. So this is the format which will be used to prepare cost sheet. So by preparing cost sheet, the firm can know the different costs, and it is easy to the management for analysis, decision making, to find out the wastage, and to the aspect should be found which are to be controlled, and they will be ways to find out how they can control, and the precautions which they have to take. So these are all can be get by analyzing the worksheet. So when we are preparing the worksheet, we are making the each and every aspect in enlarged manner. So with that, the company can easily take the information, and it is also understandable to even normal person can also understand uh, the 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 expenses, the profits, so how they are how what is the production level, how they are controlling, what are the techniques they are following. So these are can all can be known through observing the cost sheet. And with this cost sheet, the future budgets and the future plans are also be prepared by analyzing this. So they will be taking the precautions while preparing the planning or the budget, and they will be taking precautions while they purchasing the raw material and other things. The make or buy decision is taken by taken through the analysis of cost sheet, which is prepared in a regular intervals, or when the company or when the management wants information about the production, so at that time the cost sheet is prepared, so to take the decisions by the management.